Good morning, everyone. Just to let you know what we're talking about, we're leaning short. We've been short for the last hour. And the reason is because we're keen off the things that made the markets go down all month. So keep that in mind in there. That's number one. Number two, also keep in mind when the markets go up, everybody looks like a genius. So there, just keep that in mind. We make money long and short. Give props to Lorna for sticking her neck out and selling volatility yesterday or 2 days ago. That was a great trade on your part, Lorna. So just want to let you know that, and a great cover. So she pays me to compliment her, by the way. But no, good idea on your part. I just want to let you know that. Great idea. So basically taking advantage of outside volatility. So good job on your part. So what are we talking about in here? Well, why did we lean short? Because what made markets go down for months? And that's the Russell. What made the market go up yesterday? The Russell. So people thinking maybe gross okay with the whole tariff thing. Now, I'm going to go over a bunch of stuff, but just keep in mind that many on our site shorted the opening. I didn't post any trades, but they shorted it because of some of the little birdies I put in their head. So let's show you what we're talking about. The Russell, like we've talked about, the Russell for weeks has been going down. So I'm going to erase all the drawings because it gets complicated. So what are we talking about? Bear market. And let me share this, what we're talking about. So like I said yesterday, the most money I've made on the long side, ironically, is in bear markets because you get these nasty short squeezes. So if I say, oh, the market's in a bear market, that doesn't mean to walk away. There's a lot of opportunities on the long side too. So that's one thing. The other thing I want to show you in here is why do I think yesterday was a short squeeze? Well, number one, the reason that we were short is everything just rallied to August, where April 2nd, where the tariffs were. And there's actually worse tariffs because China's still a mess. And that's why we were that was one reason we were bearish. So that's one. Not yesterday. I'm talking about today. Number two in here, you don't have to sell the top, and I'll show you a perfect example. But why longer term am I bearish? I'm bearish because the growth-oriented indexes are still crapping out. Go to a weekly chart in here. Weekly chart of the Russell. The Russell is where it was in 2022. The transports are under where they were in 2000. Well, they're where they were in 2022, way under the 200 weekly. So that's what I'm telling you. The growth-oriented indexes still stink. If they were outperforming today and the ES was down, I'd look to buy the ES, but they're underperforming. Let me show you my metric of how I used it. We're going to take hourly chart. We're going to take the Russell. Remember, the Russell has underperformed for weeks, and it's at 2023 levels. So if it underperforms today, what makes you think the ES is going to go up? So we're going to take the 50% retracement from the massive rally yesterday. We showed this before the opening in the other room. It's taken back 50%. So that means that the ES, if it has a bearish pattern, 50% is here. Now, that's what we called before the opening. But it also meant that a bearish pattern was more likely to work. Once this went down, this was more likely to work. And that's so you have more than one reason. So what are your three reasons? One of the reasons, because the Russell's going down. What's the other reason? You're up a resistance and overbought on an hourly and a 4-hour. And number three, you had a head and shoulders top. This was more likely to work if this was going down. So it's all about probability. So in there, that's why you don't buy it on the way down. So now, just that's how we do it. That's how we do it. Just want to let you know that's how we do it. So where are we going with the markets? Well, here we go again. And my screens are stuck, so give me a second. All right, so let me show you. So this is how I look at it. Russell, make it easy. Do the easy trade. Look at this line I drew before the opening. That's head and shoulders top. If the Russell takes back 50%, that's what scared everybody for days. Then what makes you think the ES isn't going to take back 50%? That's all. No more, no less. I don't care about Trump. I don't care about tariffs. I don't care about China. I'm caring about the chart patterns and the correlations. Don't put too much in your head. So in there. And also, whether it's the essentials room, the restream, whether it's chart pattern master or central, if you want to talk about tariffs are potentially bad, that's great. If you say that idiot Trump is doing tariffs, I'm gonna boot you. It's not about politics in here. It's about charts and correlations. And you can look at headline news, but no political opinions. I just can't stress that enough. So Lorna's into that. Everybody's into that. That this is it's positive waves. So in there. So Tall, can I mention what you did? Well, I just showed this. I didn't press the button for you. Just keep in mind that I trained a lot of traders with this company called ETG in the 90s and 2000s. So I was in the top 5 traders out of 800, but that's not the point. The point is I trained between 30 and 50 traders. 100% success rate. So what did I do? Did I press the button for them? No, I gave them the direction and they pressed the button like Tall did today. So I didn't press the button for him. He did. So nice job in the QQQ. 5 points. That's a beautiful thing. 5 points in the QQQ. So nice job in there. So now too late. You've already made the objective for everything. That's what we were showing. That's your objective. 50% retracement. That's your objective. So that's the 50% retracement from the news. So for now. So maybe it goes later, but now the vol's up. It's not a good idea to buy puts because I'll show you. This is why I hate buying premium. Now, could you go lower? Sure, you could overshoot. You could go all the way back to 5,100, no doubt. But I just want to talk about buying puts. Market's on the low. The VIX is on the high. Where are the 5,100 puts today? I'm sure they're up. Don't get me wrong. I know. But you go to the out of the monies and it's no bargain. Now the vol's going up, so maybe you're up in them. Lucky. Yeah, the vol's up. So the puts are on their high because the markets are on the low and the volatility is on the high. But overall, if right now the markets do this for the next 2 hours and go a little lower, but slowly, these are going to go to $1. I'm just telling you, it's not good to buy those. If it goes down fast, sure, you'll make a little money. But I'm just telling you, that's what we look at. So if this bounces to only down 190, these are probably going to $5. I'm not telling you to short them whatsoever. But it's all about the Russell. So, and it's about some other things too. So let me show you some of the other stuff we watch. So one of them, high yield bonds. Right now, what is everybody worried about? They're worried about growth. They're worried about tariffs hurting growth. I mean, that's what they're doing. So to me, the Russell and the transports are the things that are the best determinants of growth. They're both at 2-year lows. That's that's just something to keep in the back of your mind. Number 2, what is everybody watching? Remember, I don't watch the dollar as like it goes down, the market should go up. Remember, the dollar went up yesterday and the markets went up. Foreign investors, there's 30 trillion in US equities. from foreigners. We only have 16 trillion overseas. So if foreigners want to dump because they're worried about U.S. growth or U.S. policy, they got to sell the dollar because their stuff is denominated in dollars. So every day that the dollar gets hit, what happens? The S&P goes down. What else happens? Because everybody says, oh, the markets are selling off. It must be a flight to quality, and the CPI was fine. The bonds go down because the dollar is telling you that foreigners are selling bonds. Look at that. If you don't think there's a coincidence, I mean, it's a good correlation. The lower the dollar goes, the more likely it's foreigners dumping our stocks and selling the dollar because they have to sell the dollar. So you got to have up a number of indicators. You don't have to have the bonds. At the moment, dollar. What else is a harbinger of economic growth? The high yield bond. The high yield bond is getting toasted today. So it went nuts yesterday. So you're going to find that the Russell and the high yield bonds also correlate, both growth oriented. This has overshot the 50% retracement. This has overshot the 50 retracement. So that's a big warning sign. It means the ES is at least going to do the 50% retracement. That's the way I look at it, which it did. But a lot of people are watching the Russell, the high yield bonds, and got to put in here, bless its heart, you got to put in the dollar. I don't know how to do it in TradingView, so I'll show you a different way. So now on the right, high yield bond, HYG, take an hourly chart or a 15-minute bond dollar on the left. So what am I watching? What I'm watching right now is the dollar going to give back everything? Well, hell yeah, it already did. The dollar is giving back it all and more. Holy cow, look at that. Look at this. So if you think, oh, yeah, no tariffs, that makes more confidence in the U.S., well, I don't know about that. That's not working, is it? Why do I want to buy stocks if the dollar's on the low? Remember, yesterday the dollar had a big rally. And now it's giving it all back. To me, that means foreigners are still selling. Or if foreigners are not, gold was a good tell too. That's a Lorna trade. Yeah. So that's a Lorna trade. So gold was a great tell. So in there. But I'm just telling you, if the dollar goes down, well, let's put it this way. If the dollar goes up and gold goes up, because usually gold goes down when the dollar rallies. If gold goes up when the dollar's going up and the dollar hits resistance and overbought and the dollar plummets, then gold's going to have another leg up. It acted great relative to the dollar. Pretty impressive. So pretty impressive on your part, Lorna. So, nice job. So now I've told you nice job on two different things. So I won't tell you any more for the year, but those are two good trades. Now, getting back to it with the rest of the market, there's a number of things to watch. Number one, don't make it harder than it has to be. Where was the resistance in the stocks? Where did the stocks rally to since the April 2nd tape bomb? Right here. So where did the stocks rally to? Right there. And then they gapped down. That's why we were scrambling to do put flies on the close yesterday, but the spreads were in the sky on everything. So I gave up. Just gave up. So the only thing I would have done is do a butterfly like we've done before in May or June under the market. But the spreads were so wide. Now, Essentials Room, I like to post trades. And I'm not just posting long trades. So keep that in mind. But I want to show you, we've talked about the XSP. It's a tenth of the SPX. Look at the volume today. I'm giving up on the XSP unless I do a trade like end of day cash settled. Look at the volume. I'm so depressed about it. It's better than yesterday. These were all ones and twos. It was amazing. So if I'm going to trade the indexes for, let's say, the end of May or the end of the week, I'm going to use the SPY. If I'm doing a day trade, I'll use the XSP. So I just want you to know that we've sort of pivoted to a more active option. Look at the active. See on the volume, which comes in real handy if you have something on and you want to stop yourself out, because it's 1 point wide, so 29,000. So I'm just telling you, if we're going to play the markets more than one day, we're just going to use the SPY. And if why the heck would I do that? Go and check out for tomorrow. Look at the butterfly in the indexes. Let's just say 525.30, just for argument's sake. I'm not doing it, just for argument's sake. $2. Well, probably it's under $2. All right. How about the XSP? Same exact one. Remember, the SPY trades till 4:15, so it's going to have some premium. So it's going to have more premium because things can happen till 4:15 and it's not cash settled. But see this at 2. Now take this one. Yeah, dollar set close enough. My goodness, it's off by 10 cents. But the difference is the spreads in these. Some of these spreads, especially when it gets really crazy, are 100% spreads. SPY, even when it gets crazy, 10-cent wide spread. So if we're doing more than one day, we're taking the SPY. If we're going just for the day, trying for a cash settled trade, we'll use the XSP. Just want to make that clear to everyone. So what else are we doing in here? Well, number one, not touching the long side whatsoever. So I want to show you a number of tells. So everything rallied to the April 2nd tape bomb. That's it. So to the April 2nd tape bomb. Whether it's Lamb Research, right to April 2nd, Home Depot, April 2nd, American Express, April 2nd. It's amazing. But what are my favorite tells? My favorite is the stocks, the dollar, and I got some other ones for you. How about the BKX, the bank index? Guess what? Yep. Right here, April 2nd. Rallied right to it. And I'm telling you, you should have up all of these. If you don't want the dollar, put the BKX. If the banks can't rally, and the dollar can't rally, and the stocks can't rally, and the Russell can't rally, why buy on the way down? That's the point. NVIDIA rallied to resistance. Tull, you saw that, right? And Mitch. So that's the point. You rally to resistance, you look for the short trigger. And like I said, it's not because political or not. It just has to do with the way it is. Now, another thing I like doing, I'll put up the SPX and then I'll put up an SPX out of the money put just to watch it because I watch it in fascination. But overall, if that Russell doesn't rally and the bonds are selling off, to me, that's a huge tell. To me, this is foreigners liquidating. They're liquidating Bitcoin, they're liquidating bonds, they're liquidating banks, they're liquidating the Russell. Now, I think most of the move is probably over, but let's see. I'm saying most of the move. So let's go to the ES again. Where's real support after the blip? I warned you that the biggest rallies are short squeezes. So where's the support? I don't see any. There, that's support. Now, do I think it's going there? Well, does everybody see this? That's a Head and Shoulders. This is a Head and Shoulders consolidation through a bigger Head and Shoulders. Let me show you. Chart. This is from my chart patterns class. I did a class a long time ago. It's also in the Arts of Short Selling. So let me show you again. So we were showing this. We were showing this today. And we were saying the probability of that being a bull flag goes down dramatically if the Russell's going down. So there are two identifiable chart patterns in this. There's the Head and Shoulders consolidation. I'll put it on a 5 on the right. That's a Head and Shoulders consolidation. That's a Head and Shoulders top. So you have a Head and Shoulders top. You don't always get them. One of the biggest mistakes of traders is thinking everything is a Head and Shoulders. That's not the way to do it. That's a Head and Shoulders. This is a Head and Shoulders consolidation. So Head and Shoulders consolidation looks like a little Head and Shoulders, and it's a consolidation after a downtrend. I see them more in downtrends. So you have the top, but you know, like I said, it could have gone either way, except the Russell was your wonderful tell. So the lower the Russell went and the dollar and the SOX, the more likely it is that this is going to get pounded. And that's what's happened. So the Russell keeps going down. So, and don't take the moving averages. I'm telling you, there are a lot of mistakes traders make. Number one, thinking that support is blindly moving averages. It's never worked for 45 years. It might work on, if you're in an uptrend, we've talked about this a lot, that if a stock goes up too much, a lot of times it reverts to the 20 moving average. That's different. That's fine. But on the way down, all that matters is price. All that matters is price, nothing else. We have up these to keep us in the trend. So if you shorted right on that break, right here or here, but you shorted, I'm going to make the 20 a lot bigger. We only are using this to keep in the right side of the market. So if you shorted with the ATR trailing stop break, you might say, well, I would have been stopped here. No, you wouldn't, because the Russell was still plummeting. So that's the whole deal. So if this, that's what the lines are for, not for support, especially if they're sloping down. I hear this over and over and over. Oh, this is support. No, it's not support. It's in a downtrend. So there's times when moving averages matter, not on the way down. Not on the way down. So, and if you can buy calls and puts and that's all you could do, that's fine. But I don't understand why you can't do the SPY. So I don't understand why that, I mean, it's the same kind of product. But Jack, thanks for that, because that was a real minority about thinking that we'd stay down. But the key is to know what to key off of. And the key in here, is that the things that have made you go down for weeks and weeks is still going down. Or let's put it this way, it's close to reclaiming, I mean, taking back a lot of yesterday. So the theory, because it's always a theory. Let me remove all the drawings. But the theory is that if I mean, this is my theory, and it's been working for years and years. If the thing that made you go down is growth, people are worried about growth. And if the thing that makes you go down is retracing more than 50% today, then it's more likely the 15-minute bearish patterns are going to work. I mean, it's all probability. Now, I want to show you something interesting in here because I promised I'd show this. Here's the bank index, the S&P. What am I going to show now? I want to show you those 5,100 puts. Now, remember when this was down 209, the 5,100 puts were $7. Let's see where they are now. You're going to get some panic. Don't get me wrong, because the vol is going to continue up. And that was something we talked about yesterday. I'd put the 50-50 puts. Here you go. I would just watch these today. I'm not shorting them whatsoever. But what do you notice? The S&P just upticked 1 point. And these went down 30%. It's an amazing phenomena. Now, with the Russell still going down and the bonds getting to hit, there's no way I'm shorting out of the money puts. I just want to show you that. So what else am I doing? Well, I'm looking for tells. So luckily, a lot of you shorted in here listening to me. So thank you. Tull and, Jack and Penn. Thank you for playing the short side. And Genu, we got bailed out in GNRC yesterday. Everybody got bailed out. So we're out. We're flat. Thank goodness. So the things that went from 380 to 620 are back to 380. Ugh. So we're out. But this is what I'm watching right now. I love to watch these out of the money puts. But I'm watching, is this going to reclaim? That's another thing a lot of people get wrong, and they got pissed at me on Stock Twits. They were talking about Alibaba. Oh, the AI, and that's great. And, you got to buy on the way down. I have more people in a lot of rooms pissed off at me to say you're crazy to be buying this. So what happened? It's down here. They wanted to buy it here. The key is whether it's the S&P or Alibaba, it takes a long time to repair the damage. So when I showed this buy trigger right here, they're like, is this a buy trigger? No. You need this. You need a long time to repair the damage. And I want to share this chart again. Like I said, there's opportunities long and short. Don't get discouraged thinking, oh, I bought on the way down and I've lost a lot of my account. Just look for good techniques. Even on a 1-minute chart, there were things to buy on the way up. So there were things to buy on the way up. But you'd have to have a shorter time frame because you're still in a longer term downtrend. So just keep that in mind, that if you're in a longer term downtrend and you want to buy on the way up, it has to be on an ultra short term. You have to shorten your time frame. But look at Alibaba here, and I'm going to go to a number of charts. Look over here. Every sell-off that Alibaba's had, and this can be the S&P, and I'll show you examples. Almost every one has taken a ton of time to repair the damage. And then it has a defined trend line. Look at this. Almost every one at least has some kind of trend line you can draw. Some. Now, there's nothing. So, and this goes with this chart, which I'm happy to share in the Essentials room. So, how many, look at that. This looks like today, but how many buying on the way down? Then they give up here. I'm never buying again. And then you get that panic rally like now. But how does this kind of bear market end? Most bear markets are between 20 and 18 months. So what do you see? I don't know about you. Doesn't this look a lot like Alibaba? You had the sell-off, the panic, but it took months to develop a defined trend line. And that's what I'm going to be looking for in the SPX. And I'll give you some examples. How's the ES short working, Penn? So far, so good. And that's the other thing I want to share because I think it's really important. So give me a second. All right. So you see that right there. You see what we're talking about. You see what we're talking about. So now let me share that with you. Because this, and like I said, maybe it's different this time, but I'm going to show you a bunch of examples. Bunch of examples. All shorts have paid off. Yeah, I hope you shorted. So everyone worked. Every single short worked because no sector is leading to the upside. But let me just show you. We're going to go back in history here. Remember, I've been doing this since 1980. So far, it's exactly like the Reagan time. Did everybody see my StockTwits post on that? So I'll show you what we're talking about. What's the similarity between the Reagan rally and the Trump rally? Less regulation, lower taxes. You heard it before. So what happened in here? So we're just going to take it. I'll show you. So on the right, we're going to take the S&P now. We're going to take it since the election. On the left, we're going to take 1980. This was all laid out in November. So don't think this is a hindsight trade. I've been calling this the entire time for everybody. And I want to show you what I think is going to happen. So here's 1980. So there are similarities in markets. So what do you notice in 1980 with the S&P? So 1980, you got the election euphoria right here. Election euphoria, lower taxes, all that. Markets testing the election breakout. Then they rallied into the inauguration, like now. Then they sold off. So now take over here. What happened in November? The election euphoria rally, the gap fill, the rally into the inauguration, and then a dump. Yeah, history does repeat. But this is the next thing to watch. I was there. I was trading it. Go and check this out on the left. So you see it held up a little. When did it end? 18 months later. How did it end? Well, does everybody see you can draw a defined trend line? Finally, it took a year. A defined trend line. Not too steep. Everybody tries to draw it like this. A defined trend line with tons of points of contact. Does anybody notice something? Then you could draw a little inverse head and shoulders right here. Look at that. With a defined horizontal line. But this horizontal line broke a big line. Look at this. And that was it. And we've had a bull market ever since. Believe it or not, we've had a bull market ever since. What else? And you might say, well, how about 2008? Yeah, but the index is up in the stratosphere. What else happened right here? This is when buybacks became legal again. Believe it or not, almost the same month. So, and that's why I've warned you that right now, when companies can't buy back stock or they voluntarily don't, markets can go down a long time. So, like I said, this has no semblance to 1980. So I can take another one. Go to 2000. It's not a one-off. It's not something about Reagan or Republicans. I don't mean that at all. I'm talking about the similarity to hopium. So go back to 2000. And what do you notice? Does this look familiar? I don't know. Maybe I'm crazy. Sure looks familiar to me. This is not the same chart I just showed you. This is 2000, 2003. Exactly the same setup. The trend line, the horizontal line, and that was it. Now you go to now. Does this have any semblance of that pattern? No. And one of the reasons is because of the slope. The slope is straight down. You need this momentum to halt and then do this. You need the momentum to do this. Slowly go down. That's slow death. And then you draw the defined trend line. 2003, 1982, the same exact pattern. Right now we're here. We're in this zone where the slope is still like that. You got to sell every rally. That's the way it looks to me. But you don't have to believe me. Just watch the Russell. Let the Russell be your guide. That's what we've been using. The Russell now gets hairy. Right here. It's here. It's where it was at 945. Where would that put the S&P? You don't want to know. For all you perma bulls. That puts it here, 5,100. Pretty impressive. So, just watch that. That's what I'd watch. Very impressive, I think. And what I mean by impressive, these tells have kept you from getting nailed. That's all. It's kept you from getting nailed because you're using the economically sensitive indicators as your tell. The other one that was a tell yesterday, not today. Delta had crap earnings and went up. So that was a nice tell. Bitcoin started going up. It's almost like those are risk on trades. Gold is more defensive. We know that. How about the DE Dow, the German DAX? It's correlating beautifully. How about the China market? Not really correlating. It's holding up, but they have a lot of government stuff. I don't chart the China very much. How about the Nifty? That's correlated great with the U.S. markets. Nifty went down here. This was posted on StockTwits, by the way, that when this did this last November, that was a big tell. This is the Indian, like Dow Jones. That with this divergence, they usually move together. That meant this was more likely to get nailed. That's why when I was on that January call, I said I'd look for at least a 10% correction. That was not that was not popular. But the Nifty and the ES correlate beautifully. So the Nifty isn't really rallying. So I'm just giving you a lot of things. Now, this is where it gets interesting. The Russell is going to get near where it was yesterday. It's already there. Near it. This has bounced all of 10 points. What's happened to those putskis I mentioned? You know they're higher, but believe it or not, they're the same place, $8, close to it, as when this was $52.50. Can you believe that? This is sold off 50 points, and these are 90 cents higher. That's an amazing statistic. That's why we don't buy premium. If you find a defined bear flag like earlier, and it's early in the day, sure, you can. But the better deal is to buy tomorrow's premium. So if you see this bear flag right here, you see that bear flag in that top. And believe it or not, you had a bear flag within a bear flag within a Head and Shoulders. Right here. The money is buying tomorrow's put premium because if the VIX goes up, then the premium holds in. So go and check out tomorrow the 5,000 calls, 5,000 puts. I bet they're on there. We know they're on the high. I mean, they're close. So if you're going to play, and they still got nailed with premium, but at least that's the better way to play it, in my opinion. If this bounces on the left, well, you were playing the break, the head and shoulders break. A number of people played something like that. Now, if you're nervous buying a $14 put, because we got to be reasonable, that bear flag corresponded to 14. You can always go because they're going to keep a lot of premium, and you buy the 4,800. There. Yeah, that was like 6. What do you notice? It's almost on the high because the VIX has gone up. So what happens with the 4,800 put for today? It's done nothing. Look at that. 0. It's gone up 50 cents. How about the 4,900 put? Well, we know it's up. It's not up much. It's up $1. You go for tomorrow. That way, if it goes down, the VIX goes up and your puts vol goes up. Today, you have opposing forces. You have the time premium killing you at the end of the day, but the vol keeping it up. But I'd go for tomorrow's. So, I mean, that's how I do it. That's a good question about the 7%. If you don't think the market's rigged for bulls, did anybody notice that the NASDAQ, when it was up 7% yesterday, didn't stop trading? Yeah, they want it to keep going. But if it's down 7%, they stop trading. So right now it's 5%. So if you take a calculator, because I'm not smart enough to figure this out that fast. I watched a 5-year-old on America's Got Talent that can do this. I can't. $134, 1,340. So that's what it would be. So that's what I see it. But I don't see it going there at the moment. Like I said, I would watch this because I find it fascinating. Watch the premium. Like I said, the people that make money are the premium sellers, unless there's a defined pattern. You had a bear flag earlier. Yeah, you could buy premium. But as you see, the ES is near its low. It's near its low, and these just went down 20%. Pretty impressive. So what am I doing? Nothing in here. I showed the tools earlier, but you had to press the button. And it worked. And like I said, that's a good question in the YouTube Live. Is this like a Fed announcement? Well, I'm not sure. All I know is let's go back over it about tariff announcement. So the tariffs were threatened all the way here. All the way here. So right here, everybody said, you know, if it's only 10% tariffs, it's going to be one of those sell on rumor, buy on news. So there were a lot of other people, economists, saying the market's trading at 22 PE. That's a joke. You're going to have to lower your earnings estimate. But it was draconian. So you went back to that area. So you might say, well, it's only 10%. Why isn't it back to 5,700? Because it shouldn't have been 5,700 in the first place. Go and take the earnings, 270. So that was the earnings before tariffs. That was the estimate. Just take 270 or take 5,700 divided by 270. You get a PE of 21. That's way too high if the growth slows. So yesterday it was almost 5,500. Take 250. That's what a lot of people are saying. So what's a 20 PE, which is still too high? 5,000. So now you see why, even though he backed off, a lot of people are thinking 250 on the S&P estimate because tariffs are still bad. So that's why we faded at April 2nd gaps. So just let you know, that's why we faded. So a lot of you press the buttons. Nice job. And Jack, I want to show you this. You know, we talk about the paper trading, and I got to tell you right now, Jack has wiped me on this. I've done fine, but he did amazing. But I want to show you about executions. And I want to show you what I did. So yesterday, this is paper trading. I shorted right here. I bought right here. And then I'm commentating. I'm not going to keep putting in orders. But 1,000 points, I would have caught up to you, Jack. But I want to show you on selling on the way down. So I'm going to take off every indicator on how much more you make if you go with the trend. Because the problem is where I sold, you weren't sure if it was going to have another leg up. So I was thrilled to take a profit. This is paper trading. But I want to go back to my history of paper trading. So what are you going to notice? The most I made was when you were selling on the way down. So the most I made was selling on the way down. I sold on the way up here. I would have lost. I was down a lot. You sell on the way down. I'm just telling you, if you go through even this. So I bought on the way up, sold up here. Just telling you that you make a lot more if you go with the trend instead of being a hero. I see too many sites that buy on the way down, and there's a time and a place to play like that. Now isn't one. If the Russell is going down, why buy the ES on the way down? And that's why we're staying short. There's another reason to stay short. JP Morgan has earnings tomorrow morning and it refuses to bounce. You would think traders wanted to revert to unchanged. They don't. Like I said, all of these could go back to where they were yesterday, if it was to where it was yesterday. Now, I am real interested. This is how you play a short of puts. I'm not playing short of puts. I'm just telling you an example. If you saw the ES get above here and the slope starts changing, it's a better sale at 6 than it is at 14. Because then the trend has changed. You don't have it yet. So in there. And Ginu, can you believe it's a round trip in GNC? We were gagging in it. A round trip. It's hard to believe. Hard to believe. So pretty cool. So I didn't go near it, but Gino, we're out. So we bought those. We actually made what, 15%. We were very thrilled. Believe it or not, the one you got out of yesterday at 620, I think. This one is 5. But more impressive is the 95, 110, 115 is only where 10 points. It's almost the same price. Can you believe that? So in hurricane season, we're going to look to buy this. The problem is it looks like Alibaba. It doesn't have any kind of semblance of a bottom. That's the only problem I have. That's why, Gino, I was thrilled to take the profit. So far, working to perfection. The stocks going down, the dollar going down, the bonds going down, the Russell going down makes it more likely that the ES is going to test the wherever the Russell is. So how is that working for the essentials room? Like I said, when the markets rally, everybody looks like a genius. Got to know how to make on the long and short side. So is everybody doing okay on this? Russell, just keep this arrow right here. And just so you know, this was also posted in Stock Twits if you don't follow me. So in the essentials room, I'm not allowed to put a lot of, I'm allowed, but it's hard to get on, log into a bunch of different chats. So I would go and look what I'm doing on Stock Twits. See the arrow? Where would that put the ES on the right? This arrow was yesterday. Yeah, the resistance. There. That's what I'm looking at. That. Yeah, that. So why shouldn't it go there? So here, let me share this. I can't share it in the YouTube live. Like I said, when the markets go up, everybody looks like a genius. We shorted today. See the bear flag? I mean, I can't stress this enough. Do you see the head and shoulders? Look at that. That's a beautiful thing. And that's more likely to work if this is already going down. Keep in mind, this breakdown of the Russell was 7 in the morning. This was 10. That's why everybody in the room was able to get off a short. So now you got to watch that. So we have no positions. We're zero. Nice. Now, what else are we going to do? Well, nothing in here, but I'll tell you something you should do. This is sort of a laughable thing, but it works. So I was looking at this. Yeah, this is a real shame to see everybody that tape raced yesterday because they knew something. It's a real shame to see it give it all back. But I want to show you something because I guess there's a website that has it. So you had Marjorie Taylor Greene buying right before Trump announced the pause. Now, I don't care about Marjorie Taylor Greene one bit. What I care about, can you go to a site that shows what the congressmen are doing? You sure can. So here is Marjorie Taylor Greene, what she's been doing. Buying all this. Lots of things. But there's a better one. Quiver Quantitative. Because if you don't want to watch her, watch Pelosi. Watch all these people. Trade like an insider. I don't have an account with them. You can have a free account. Track Nancy Pelosi, Kamala Harris, JD Vance. Let's see if Vance has done anything. Yeah, he bought the Qs on August 13th. Well, that's when he filed. What did the Qs do on August 13th? Remember, the Fed sort of said they'd come to the rescue if they need to. Yeah, it was okay. Right there. So I'm just telling you, Vance, Pelosi, I don't care who it is. I like to watch the insiders on Congress. So just one thing that does drive me nuts. One of the people that got elected campaigning on that he was going to eliminate insider trading in Congress is the most active trader on Congress once he got elected. That's a true story. Unbelievable. Unbelievable. So is the NASDAQ going to stop trading? 6.31. It's close, but no cigar. Is the Russell going to stop trading? 1 more percent. So I remember 325, they take off the limits. So I'm just telling you, go into Quiver Quantitative. It doesn't hurt to have that in. Now, what do I think's going to happen? I think right now you back away from everything. Why do you back away? You back away because with the market this far down, so the Dow back down near, the S&P back near that 5,000, how much you want to bet something comes out about China? So I'm not going near the market here. There was a time and a place to play the Russell or the ES. Now we're near support. I'm not going near it. So just want to let you know that I wouldn't be surprised to see some kind of tape bomb. And another thing that I need to go over, and that's the rule of 16 with the VIX. That was a dumb sell-off in the VIX yesterday. So the VIX, do a rule of 16. The rule of 16 is what traders expect daily move of the S&P. So the VIX got killed. So 32 divided by 16. So traders were expecting only a 2% move going forward. Well, the problem is it moved 10% yesterday. Why should the VIX be this low? The realized vol was in the sky. And that's why the VIX is back up to here. It should be. In fact, if I'm right, the VIX goes to 80. So just that's something to know. The rule of 16. Jack, if you're doing a paper trade, first I go on the Russell. If this goes to down limit, then I look to do the paper trading. So where's the support? Let's go into that. I only have 3 minutes in here. Chart patterns mastery, I'll get in on the other room. Happy to get it on in the other room. But Russell, you're seeing the red line. Yeah, that's where it started at the rally. Remember, 50% retracement. It was more likely that the S&P was going to have a 50% retracement. Well, that worked, didn't it? 100% retracement. This is more likely to have 100% retracement. So let's take the Dow transports. How's that doing? Remember, non-24 hours. So I got to show it like that. That would be here. Another 300 points. Take the Russell, the RUT, non-24 hour. That would be here. So, in fact, I could just show you this. Let's put the transports and the Russell. You can take off intraday. Like I said, do not screw with moving averages other than staying on the correct side of the market. I just can't stress that enough. So if you're playing an index like the ES, was there anywhere to buy it back? No. Now, when it gets this far from the 20 and this far from the ATR trailing stop, usually I'll buy back half, or I'll go to an even shorter moving average. That's 100 points. No way. If I'm doing it, I'm buying back half here. It's too far from everything. It's just too far. It's just too far from it. But I thought you'd like this in here. So we're going to put the transports and the Russell, and then I got to get going. I hope this has helped you make some money. Right here. Right here. That's what I'm watching. Just keep in mind that if it goes to there, the NASDAQ and the Russell are going to be down limit, down 7%, and then you're going to get some funky stuff going on. They'll halt trading. There. Hope that helps. Have a great day. And like I said, in a bull market, every long looks brilliant. You got to learn how to make on both sides of the market. I have a class on the art of short selling. So take care. Talk to you later.